Hey, good morning, everybody. Welcome into Mining Stock Daily this Friday for the long form episode to get you into the last day of trading and into the weekend. Trevor Hall here, your host as always, and we've got a two-part show for you today. First, long conversation with everybody's favorite green chicken, Doomberg, and he has written a number of pieces over the last, few months that we needed to catch up with him, pertaining specifically with some very niche metals and how it relates not only to the mining sector, but also to the semiconductor sector and on the back of the AI boom. So there's a long conversation. We discuss a lot on top of that with Doomberg, and it's in general, I think you're going to get a lot of value and some deep thoughts out of what he communicates with me and to the listeners. In the second segment, we turn to Burkina Faso, and there's been a lot of kind of concern and speculations regarding the mining industry and the gold mining developments there on the back of some recent rumors and news. So we welcome in Paddy Downey, CEO of Orezone Gold, to kind of clear up some of that, and they also had some Q3 production numbers out, so we talk about the latest developments from the Bombori gold mine there in Burkina Faso. Special thank you to Visa Silver, Arizona Sonoran Copper, and Minera Alamos for their continued support of the podcast. And as always, if you wouldn't mind, hit that like, subscribe if you haven't already, and share. That does a lot of good to get in front of new investors. With this metals market continuing to roar, we still have a lot of people yet to get in front of because the generalists just are not there yet. It's surprising. This is actually shocking. All right, let's get into our conversation with Doomberg and have a lovely weekend, everybody. We'll see you at the end. Well, it has been far too long since we invited our friend from the chicken coop, Mr. Doomberg, the green chicken. How are you, Doomy?
Trevor, it has been way too long.
I know.
And since I last left you, I see that you have launched an entire media ecosystem. Congratulations on clearcommodity.net, our go-to place for all things mining and gold and energy. And I know that you and your partners in that endeavor are going to have a lot of fun doing that.
Thank you so much. I really appreciate that. It's before it was one of those things where if you follow the business of media, this is where things were heading to. It was, it's not enough to have just a one-off type of podcast, right? Like the best in the business are creating networks, and those networks are getting picked up by bigger media outlets. I'm not saying that's what's going to happen, but I just following the evolution of the podcasting business and the media space, like this is where we're going. And so I decided, this is where we need to be. We need to make an effort to be there and follow what the business model is. And so that's what we did.
It's a real slick web page, and I know how much work goes into making and maintaining such efforts. We're just going to keep whittling away at our little blog over here.
Oh, it's not just a little blog. It's not a little blog.
Resist the temptation to make something bigger. But I understand that's where podcasts are going for sure. And again, heartfelt congratulations on it. And I'm good friends with Tony Greer. I know who's working with you on this as well. And so I wish you guys nothing but the best.
Yeah, thank you so much for the kind words. Well, let's jump into it because one of those things, actually, an improvement that needs to be made on the clearcommodity.net website, and we are working on it, is to get an active tin listing, the tin price listing onto that site. That is coming. And the reason I actually reached out to you is on a recent blog that you published regarding tin and really a supply crunch that's happening. It doesn't really necessarily feel like the market's adjusted to it with a very specific operation being offline for the most part of 2024. But this obviously has implications, and maybe kind of fill us in on that research and what you're seeing within the tin trade and that market.
You bet. Well, it's funny you should mention that trying to get a real-time, price bot onto your website that quotes the price of tin is challenging. And the social preview for that piece is how artificial intelligence and an artificial supply crunch might disrupt the market for the forgotten metal. So, yeah, you can get a quote for gold and silver and copper and oil and natural gas and coal. But tin is kind of the forgotten metal, even though it plays a really, really important role in the global economy. And you're right. So the largest tin mine in the world happens to be in Myanmar, in the Ma region of the Myanmar. It's the Myanmar mine, and it produces a substantial amount of the world's tin. And it's been offline for more than a year. We should say that, Myanmar is a country that has been in the throes of civil unrest since the end of the Second World War. Your listeners might be familiar with the name that it had back then, which was Burma, and it was the site of many famous battles between the British and the Japanese. And it has this massive tin deposit near the Chinese border, and the army, I guess, that leads the United WA State, the United WA State Army, the UWSA, is this military outfit that is coincidentally on the U.S. Sanctions list. I mean, what are you really a military operation in a faraway land if you're not being sanctioned by the U.S. at this point? And so they just decided last April that they would shut this mine down come August, and the market kind of didn't really believe them, and they did. They shut it down for allegedly safety reasons and permitting, and I'm sure insufficient graft and other challenges that you had. But it's a big mine. It's been down for more than a year now, and people are starting to get a little bit concerned about it, because there's even just getting ready for this podcast today, since we published this piece at the beginning of the month, literally on October 1st, I was just checking with my Google machine, and I don't see any news of the impasse being cleared. And so if this goes on for a little while longer, I think you'll see the tin prices begin to reflect that, especially since, of course, the number one application for tin is in soldering applications, which are critical for semiconductors. And if there's electronics somewhere, there's tin in it. So yeah, the tin price today is, generic first month tin is like $34,000 a ton, up from the low 20s same time last year. So the market's starting to reflect it, but we shall see. It's a fascinating story, which is why we wrote about it.
Yeah, well, there's obviously things happening behind the scenes, because it is a critical mineral or metal, however you want to classify it, one of the two. And so the Department of Defense, as you noted, they are continuing to watch this, and they the press release, I don't know, you wouldn't know the date off probably with your head, but they awarded $19 million to Nathan Trotter and Co.
Yeah,
for a domestic facility to build recycling of tin capacity. But Doomberg, I think the question is, like, we know recycling doesn't always fit the demand, right? It's usually a very small percentage, and no matter what metal you're talking about. So we still have to supply this from somewhere, right?
Yeah. So interesting that you should say that. First of all, the date is September 24th. I remember most of the fine details of the pieces that we produced, because it's the work of my life. And you're right. But actually, the U.S. capacity for recycling is pretty significant. It's about 10,000 tons a year, which would make the U.S., if it were a base metal producer, it would sort of be in top 10 in the world. So it's not nothing. It's meaningful. A lot of tin gets recycled. Well, I mean, recycling efforts have become pretty sophisticated in the West, and in like battery metal space and stuff, there is a point where you have enough of these metals floating around that you could eventually close loop the thing, where the supply coming offline is recycled with great efficacy, to the point where a fair portion, maybe not all, but a fair portion of your new demand is offset. This is, of course, called urban mining, which I'm sure is a concept that you're very familiar with. And tin in particular, the U.S. hasn't mined or smelted fresh tin or virgin tin for 40 years. So this is and tin finds wide use, not just in the semiconductor space, but in very sensitive military applications as well, which is why you see, the U.S. Department of Defense taking notice of it. And in fact, it was that press release, which we thought was very odd, to Nathan Trotter, which is a great historic privately owned business that very few people know of, but everyone in the metal space is probably aware of it. That press release from the Department of Defense, as part of the Defense Production Act investment program, caught our attention, because normally the DoD is very smart, right? They see the pieces on the board. Our politicians might have their flaws and they might be dumb, but the DoD is not those things. It may be corrupt in some ways, and it may be a giant bureaucracy that's difficult to get a hold of. But the DoD generally sees risks on the board pretty well and works to abate them. And so when we saw that press release, that was the uh, the sign that there might be some animals here that we could go hunt. And we went down and down the road of digging into the tin market and leveraged a few of the experts in the Doomberg network, which has become more and more common for us. Anytime we write a piece, we know which subscribers have experience and we can reach out to them, or they send us ideas. And so it's become quite fun.
Are you a tin baron now, Doomey?
I'm charter member of the Tin Council before it blew up. As we opened the piece with the story of how basically tin used to be managed in a way similar to oil and OPEC, but actually pretty unique back in the day. For many decades, the producers and the consuming countries got together in a cartel, and they conspired with each other to keep the price of tin within a reasonable band. And the Tin Council's collapse, in October of 1985 was a real bombshell for the LME. Almost put the LME out of business. Very familiar to the whole nickel issue that just transpired a little while ago. So forever thus, big traders, big whales get offsides and they start writing checks they can't cash. And so that was the opening narrative for the piece, and then we weaved into this Nathan Trotter web press release.
Yeah. The tin market's currently sitting just over $32,000 per ton. It's still a pretty good price, but a lot of people following this very niche sector expect things to go higher. And I'm just kind of wondering if the recycling aspect of the metal has been enough to keep this price subdued, or if you think that there's more demand here in the near future to keep that price, to have that price rise once again.
So here's what we've been seeing since the mine was closed. First of all, one of the reasons why the market hasn't freaked out yet, and I should say before I go down this answer, the tin market today reminds us of the uranium market when we first started writing about it, when Cuppy came out with that call and Sprott Physical Uranium Trust came on the scenes. And very similar vibe, small, very passionate group on Twitter, basically, making a passionate case that, their preferred commodity is going to moon. So when the mine was closed, they had a lot of base metal above ground, and the United Wa State Army allowed that inventory to be sent to China to be smelted. And so they've been working down above ground inventory, which the market took or interpreted as, this was not going to be permanent, and they're trying to cooperate with the market, and they truly are concerned about safety and labor and all the things that they claim they're worried about when they shut the mine down. Those stocks are being worked through, and the stocks at the LME and in Shanghai are grinding lower. And so if the mine doesn't open soon, then you can imagine a scenario where we get a nickel situation. Now, I personally don't like to invest on, betting on the outcome of such possibilities. But many people do. The stock markets are a bit of a casino, and everybody likes a lottery ticket. And so, but it does sort of have a uranium vibe before nuclear took off, and now we have tin just as AI is taking off. And so there's a lot of analogies, which is why we were interested to do some digging into it.
Yeah, and we're going to talk about uranium and nuclear energy here in a little bit. I think that actually the last time you and I actually chatted was with Justin on our Going Nuclear podcast months ago. So, but let's table that because I don't want to dive into that quite yet, because we kind of got a flow going here of other topics. And I want to stick with kind of the resources needed for the semiconductor industry, the chips industry, because obviously that's pertinent timing, and almost anybody can make some sort of connection to that because it's been in front of our face in the news media for so long. And I want to turn our listeners' attention to another piece you wrote about the Spruce mine in the Carolinas, and this is a quartz mine that produces silicon dioxide, and that is converted to grades for ultra pure silicon for solar and semiconductor sectors. And this has implications with some of the natural disasters that the East Coast have seen in the last few weeks. And, this is a very important story as well, but it just kind of shows you, how basic resources can become the very fragile sticking point in an already, I don't know, very touchy semiconductor and chip sector, right? I mean, there's so many
So
things about it.
it's fascinating the way you framed it because you made the same mistake that many people do when they look at this situation. So this was one situation where we were saying like everybody should calm down, and the social media preview for the piece was pennies don't hold up dollars for long. In fact, the high purity quartz that's produced at Spruce Pine is not used to make ultra high purity silicon directly, in the sense that the silicon atoms in the quartz aren't converted into ultra pure silicons for solar and semiconductors. What they are used for is to make basically glass crucibles that are then used to make the ignits from semiconductor grade polysilicon. And so these crucibles are used to form the ignits, which are then sliced into wafers. But the silicon oxide itself is just an ultra pure form of it that allows those crucibles to operate at very high temperatures that are needed in the production of the ultra pure silicon. And so our thesis of that piece is the way we do it today is not the way we must do it. The entire market value of the high purity quartz, mostly produced there, 90% of the world's supply is in North Carolina, is about $1 billion, and the semiconductor industry is about $600 billion. And so if suddenly the supply was offline forever, China, it's just sand. It's just a very high purity form of sand. China would figure out very quickly how to spool up alternative supply. And as we said in the piece, the owners of those mines are the most motivated to bring them online as quickly as possible because they're sitting on a nice little monopoly, right? They're charging a really premium price for sand that they're just digging out of the ground. And the last thing any monopolist wants is the market to be motivated to bring on alternative supplies. And so that one was more, look, we're Doomberg. If there's a reason to worry, we'll be the first to flag it. But in this case, and events since we published that piece have proven out, the mine's basically already back online. And look, it's not like the place was nuked, right? I mean, there was a massive flood. It was disastrous. Lots of people died. Lots of people lost property. Those are all tragedies, not to be minimized. But we saw an awful lot of hype cycle / scaremongering around these mines, and really pennies don't hold up dollars for long. Given my scientific background, if you put it this way, if we created a startup where we decided we're going to make ultra pure silicon for sale to be everybody in the semiconductor industry's source of second supply, I could raise money against that idea, and we would solve that problem pretty quickly. So if we can do it, the Chinese can do it. That one was a bit more of a look, let's calm down a bit. This is not going to be such a huge deal.
I mean, does it have to be the Chinese if they find a secondary supply? I mean, couldn't somebody in the West find a
Oh, of course,
supply?
but China, cheap labor, thermal coal, brute force, China speed, and by the way, the industry has probably 2 to 3 months worth of crucibles in inventory, and then 2 to 3 months at least worth of high purity quartz in inventory to make those crucibles. And so it'd be a while before this became an issue. And again, the most motivated people in this entire story are the owners of those mines because they're fat and happy, printing cash. Don't give anybody any reason to move away from your product. And they pulled out all the stops to get their product back to market, as they should. Kudos to them. Capitalism works.
Well, and I just, sometimes I will push back a little bit, because when we talk about Chinese technology taking market share, doing things cheaply, I think too often we almost discount here in the West, and as Americans, and like we almost discount our own ingenuity sometimes. I know it's layered with bureaucracy and things are like really a pain in the ass to get done. I listened to a long discussion with Elon Musk on another podcast about the issues of getting some of his gigafactories built in the U.S. compared to other places. Yeah, it's makes it really hard, but I just think sometimes we're too quickly to discount American ingenuity to get things done.
Yeah, and if we had to, we could, but the Chinese would do it quicker and faster and cheaper. But I mean, the one area that matters the most where the U.S. is so dominant is in the primary energy space. Like, we drill and develop technology and implement like no other country on earth. World's largest supplier of oil, the world's largest supplier of natural gas by a wide margin, still a net exporter of coal, fracking, horizontal drilling. And the reason that is 2 quirks of U.S. regulatory policy, which is if molecules don't leave a state, or the country, then the state gets pretty significant regulatory oversight. So Louisiana and Texas can produce drill, baby, drill, and California can choose not to. Those are done at the state level. And then mineral rights go with the property owners. And the combination of those two things has made the U.S. an energy gigapower. And yes, of course, we can still do things, but anything that requires federal permitting, i.e. nuclear, is a big challenge. But we only use China as a straw man in that piece to say, what is your bet now? What is your best alternative to negotiate an agreement? Like, if this mine never came back on, it's not like the entire semiconductor industry is just going to go home, right? I mean, they're going to do something, and they're going to do it quickly, and there's going to be a giant prize dangled in front of the supply chain. And we've been heating up and otherwise tinkering with sand for thousands of years. This is not like complicated chemistry. So in our view, this was much ado about nothing. And since we're on a 4-day treadmill for our pieces, it was nice to write.
Yeah. Well, and it's interesting. This is all happening at the same time that semiconductor financials are starting to come out, and I haven't had enough time in the last 24 hours to really dig into this, but I did see ASML, their stock just plummeted with sales warnings based on those numbers, and that it kind of took the entire semiconductor ETF with it, including NVIDIA. But what's funny is, I typically have Bloomberg TV on in the morning, and my kids love it. And I say that sarcastically, but they're forced to watch it during their breakfast. And the commentators on TV were mentioned for the first time I've heard in a long time, the cyclicality of the semiconductor space, which I hadn't heard in the last year or two. But maybe these concerns about the inputs needed for the semiconductor issues, if it's going to happen, maybe this is a good time to happen. If there is a cyclicality, if we are getting to a point of lower demand, I don't know. I don't know if this is a question, but I'm just kind of trying to connect some dots here and see if there is really cyclicality to it.
Let me connect a different set of dots, because we actually wrote a piece about ASML last month.
Of course you did.
Called Going Dutch, which was a fun title. And the subtitle of that piece was, "In the U.S.-China Chip War, the Netherlands Struggles to Split the Bill." So ASML is a Dutch company. And for those that are unaware, they produce lithography machines, basically the world's best lithography machines, which the foundries need to produce semiconductor chips. And they have a monopoly position on the highest end lithography machines, so-called extreme ultraviolet. And they've been sanctioned by the US in an effort to stop them from providing this high-end technology to China, which puts them in a real pickle. And I have a different view. We have a different view based on the research we did for that piece and then following the market since that. I think it's actually pretty scary. And we talked a friend out of going long ASML yesterday after hours, because he's like, buy the dip. Don't buy that dip was our advice. Not that we give investment advice, but he's a friend. What happened and why that stock tanked was because of the sanctions. China had been aggressively pre-ordering as much as they could of all the equipment that they were still allowed to sell to China from ASML. And that drove a huge growth spurt for ASML, which the market, of course, slapped a healthy multiple on. And yesterday, they accidentally pre-announced their earnings during trading hours, which, of course, is never a vote of confidence in the management. But also embedded in those earnings was the fact that their order book, which the market had thought would be around $5.5 billion, came in at like $2.5 billion. And my spidey sense / pattern recognition kicked in. We've been writing many articles warning people that China has set its sights on semiconductors, and it will steal, bribe, pick your favorite dirty trick. They will win. I've been in markets that China has set their sights on, and we've lost and they won. And I see this pattern playing in the semiconductor space. My first instinct when I saw that number is China has cracked the code. And they're going to put ASML out of business. I mean, they're just going to, like they always do, make it cheaper, quicker, better, at a fraction of the price. And right now, ASML has a monopoly, and China will steal all their technology. In the piece that we wrote, Going Dutch, we talked about how last year there was a big scandal because a high-level ASML employee, basically went back to China with all of the secrets on a flash drive, which is forever thus. This is what China does. And so they will blackmail, they will bribe, they will steal your employees, they will take your technology and they will use it unabashedly. And good luck suing them. Like we'll see you in patent court in Shanghai. All right. And so that was to us, this was a very bad sign for ASML. Like if China no longer needs to buy from them, it's not just because they have a healthy inventory. So keep an eye out on that. Same thing with chip design, NVIDIA. Look, there's a huge bubble in AI right now. Now, I should say, we are firm believers that AI is revolutionary. We use it in our work, mostly for research purposes, but also just to study it because we think it's profound. It has a 1999 internet.com feel to it. Yes, that was a giant bubble, and the world changed radically because of the internet. I mean, I could click while I'm talking to you now. I can click and order all of my groceries from Amazon and they'll show up tomorrow at my house. Like, how crazy is that, right? So that's real. A bunch of pet.coms went out of business, but what was left behind was a profound change in the way humans transact, interact, and basically exist. And AI is like 5 times that. It's huge. I've seen it. I have a really good friend who's at the cutting edge of it. He's thinking about starting a blog, and luckily he has a friend who knows how to do that. So this is real, and it's coming. But back to ASML, I would be very cautious. China will achieve its national objectives. Betting against China achieving its national objectives in any market has been a losing trade for decades. So we'll see.
I'm glad you mentioned the AI bubble. I have a very good friend and very successful in technology development, and was with a company that got bought out for a couple of billion. So he's off doing his own thing, starting his own firm. And I had a great conversation with him a couple of weeks ago regarding AI. And he had this one line, I don't know if I'll ever forget it, but he said, when it comes to artificial intelligence and all these, new products out there, 20% of them could be revolutionary, but the other 80% are absolute shit.
So my view is the products that you're developing from today's AI will be obsolete in 6 months. So you can't really run discounted cash flow, or what are you telling your VC investors? And so things are moving so fast. So again, this friend I mentioned, he tells me just stunning things about open source AI. Not to go down a tangent, but like OpenAI is not cutting edge, right? I mean, ChatGPT and all that, that's just like packaged and, like what's available for free on the open internet that you can download to a computer to run and train is shocking. And everyone's doing it, contributing. It's a giant mess. By the way, no guardrails, like none. You don't have to think too long about what that means. Absolutely no guardrails, free for all, wild, wild west, cutting edge, and every brilliant mind around the world is contributing if they have an internet connection. And it's moving so fast that no government has any hope of controlling it.
Right.
It blows your mind, and I don't want to again.
Well, it's terrifying. I mean, that is terrifying, right? I mean, there's got somewhere there needs to be some sort. Listen, I'm not out there saying everything needs to be regulated.
But it can't. It's just the horse is gone. Like, we can talk about greasing the barn door and maybe someday potentially starting to close it. That horse is gone. Like, it's gone, Trevor. Like, it's gone. It would blow your mind. And maybe we're going to ponder writing a few pieces on it, but it's not really what people come to Doomberg to read, but it's still very fascinating to us and very real.
Yeah. Real quick, turning our attention, because we're talking about AI, there has been some pretty incredible stories out regarding nuclear energy powering the data centers and for technology companies for their AI infrastructure, which is pretty fascinating. I know you've done a number of interviews and commented on this in the past, so I don't necessarily want to take away from that, but maybe if you can provide us some comments, because it sounds like, I think I saw a headline just in the last couple of days that Google is now in the game of nuclear power.
Yeah, this converges a lot of what we've been writing about, and I've talked about with you on various appearances. By the way, in the last appearance with Justin, we correctly cautioned that maybe 107 to 108 uranium was a bit of a sell some, take some risk off Icarus print moment, and now it's consolidating back at a more reasonable price. But we wrote a piece last year called Fission Chips, where we predicted that that the need to power data centers would be the thing that normalizes nuclear energy again. And we're seeing that now. I mean, Microsoft with 3 Mile Island, Google talking about SMRs. Nuclear is back. The old Malthusians will be slayed. The tech companies who fund most of these environmental organizations are going to demand that they shift their tone on nuclear. So we've never been more bullish on nuclear. It doesn't mean that it's going to happen today, but the trend is very clear. Everywhere we look around the world, with the potential exception of Germany, nuclear is back. Japan turning on reactors, the US restarting mothballed reactors. We were pondering a piece about sort of a nuclear renaissance cost curve, where we look at all the sites across the US which are already permitted, that have an existing power plant where you could slap another reactor in there at very low cost and pretty quickly. Those are the types of things that'll get done first. Completely greenfield, new builds from scratch are going to take a long time, but there's dozens of facilities across the US. We have some 93 reactors, I think, across 56 power plants. There's a pathway to get that next leg up, increase our supply by 30, 50, 70% pretty quickly with minimal regulatory challenges. There's always local issues and things like that. So I think the renaissance is real, but also I do think this is very bullish for natural gas as well, as we wrote about in a completely separate piece.
Yeah, absolutely. And I honestly, I do not pay attention to any of the dialogue or narrative coming out of the presidential candidates right now, but have they provided any sort of particular stance on nuclear energy that's actually like got legs?
I think they're irrelevant.
Yeah.
I think this is a giant distraction. But I don't pay much attention to it either. Whatever the big tech companies want, they'll get. That was sort of the point of our piece last year, this Kurzweilian exponential growth in computing power. A great heuristic to model the world is that society will arrange itself to keep us on that curve, no matter what we have to do. And if normalizing nuclear and using natural gas as a bridging fuel is what we have to do to keep us on that Kurzweilian curve, we will do it. And Harris or Trump aren't going to stand in the way of it. They'll wet their beak and get their campaign contributions. But neither candidate well, I don't think Harris has much of a platform across any dimensions. I think she's just standing as a front for a machine. That machine has come out pro-nuclear. The Biden administration has worked very hard. Podesta was just at Climate Week in New York, working with 14 large big banks to make the funding of nuclear power plants sort of in the same category as wind and solar, i.e. renewable and carbon-free and green and blessed. And so the current administration is decidedly pro-nuclear, and I don't think that Trump would get in the way of it. And so I just don't think the presidential election is relevant to the fate of uranium demand over the next 15 years now.
Yeah. What about some of the economic policies, or lack thereof, in some cases with these two candidates? I do kind of want to dive into this campaign here, Doomberg, just
Sure.
so we can maybe talk about what potentially could come, knowing that the older I get, the more agnostic I become politically, to be quite honest with you. I'm just kind of like I said, I have not been following closely to any campaign, but the snippets I have found on both cases, quite frankly, I've just found to be sound bites without any like process of what the achievement and outcome is quite going to be. It just kind of sounds like pandering to different groups from both sides. And the more I hear this, I just keep thinking, well, what does a bond market look like come May 2025? What does this debt level continue to look like at the end of 2025? And I just don't see either candidate actually like trying to tackle the hard questions that need to be answered. I just see it more or less pandering for votes.
Look, the deficit went up under Trump like you wouldn't believe, right? I mean, and so there's no talk of fiscal discipline from either party. And I don't really include Trump in the Republican Party. Trump is a phenom that is using the Republican Party architecture for his sort of personal force of personality, I guess. And it's a profound one. It's a very powerful one. Like, I don't diminish the man. He has, overcome a lot more than you and I had in life. given what's been thrown at them the last few years. There's no talk of fiscal discipline. We're going to run the experiment. What happens when the global reserve currency prints money to pay interest on debt that it owes? And normally you would associate that with emerging markets. And look, we are printing money to pay our debts. And why do I say that? Well, if you just look at the duration of the debt outstanding, it's really, really front loaded, which is what emerging markets do. Like we're issuing bills to roll debt and pay interest. That's Banana Republic stuff. Now, there's never been a Banana Republic in a debt spiral that also happens to be in possession of the global reserve currency. So we're running an experiment that has never been run before. But I own a lot of gold, and I own a lot of land, and I own a lot of collectibles because I do worry. Like I view the price of gold as the inverse of the price of the dollar. And as we were talking, it crossed $2,700 an ounce before we got on air. I think it's pulled back a little bit. Gold is the one thing I own that I don't like to see go up, because it's speaking to the rest of my portfolio that is actually denominated in U.S. dollars, right? And so I view gold as a value preserver and a liquidity provider in a crisis. But yeah, I think we just look. And Luke Roman's done great work on this, by the way. And so I don't like to take other people's ideas without crediting them. I mean, Luke Roman writes Tree Rings, forceforthetrees.com, really brilliant analyst. He has this thing called sort of total mandatory sort of interest expense. And he includes in the bucket of interest military and Social Security, Medicare, things like that. Washington will never cut, right? That's exploded well beyond tax receipts. In other words, unless we dramatically raise taxes, which will crush the economy, which will, in fact, his belief is we have so much debt that we're trapped. Like, if you raise taxes and collapse the economy, your receipts go down faster and you're still trapped, right? And so there's no way out but printing. It's kind of scary to think through. Are we really boiled frogs in the early innings of a sort of hyperinflationary, Weimar Republic type event? Remains to be seen. We'll see. It is sort of surreal to think of the United States being in this position. Debt to GDP well above 100%. Interest expense alone more than $1 trillion a year. I mean, the entire federal budget crossed $1 trillion as Reagan was taking office. Like, the budget was $1 trillion, and now the interest on our debt is $1 trillion, and we add $1 trillion in debt every 90 days. It's crazy. But so I read a lot about historical examples of hyperinflation and what you see during those periods and how people reacted and who did well. And it's a whole subject we could talk about, but it is kind of scary. So I would say, yeah, that is the boogeyman off to the side that everyone knows is there and nobody really talks about. And we're just going to go ahead with our daily activities and assume it's not going to matter.
Yeah. Well, and gold seems to be sniffing this out. I think that's part of the equation behind the rising gold price. But it's also happening simultaneously with discussions about a new BRICS currency, a unit that gold will play some sort of potential part in with that new currency. I mean, all these things are just working in tandem together, and it's just going to be fascinating. Whatever happens with a BRICS currency, will wait to be seen. It could be a lot more talk than is substance, quite like U.S. politicians. But
Yeah.
Gold seems to be following this case, and there's so much happening behind just the price movement. That's I just don't. It doesn't feel like gold's even close to being done calling out foul here.
Yeah. So I mean, I love the name, right? The unit. Lots of jokes.
That's what they called me in high school in football.
So for those that aren't unaware, there's a very important meeting that the Western media is just not covering coming up in Kazan next week. BRICS Summit that Putin is hosting, where many believe, I wouldn't necessarily call it a currency. I would call it a mechanism to facilitate global trade outside of the US dollar system, where imbalances are settled using a combination of gold and a basket of currencies of the participating countries. I believe, and it's all done sort of on a central bank digital currency, blockchain ledger. That's what I've been hearing. That's the rumors. That's what people who follow this more closely than you and I do are anticipating. So it's not like we're going to have a brick dollar and people are going to shift to that. The design construct of these countries is, and I think this was all accelerated with the very poorly thought out and executed sanctions against Russia and the freezing of their reserves. This spooked a lot of countries, right? So any country that has ever been or might ever be in the crosshairs of the U.S. Treasury Department suddenly realized that their Western denominated debt, i.e. reserves, are no longer money good. And so a solution was needed. And, again, back to the whole conversation about the fiscal situation in the U.S. and the reserve currency, like people are seeing all of those things and deciding like we need to do something for ourselves. So we're sanctioning everybody. I made a joke about this, United Wa State Army being sanctioned by the U.S. Treasury. There's only so many times you could fire that gun before people build armor, right? The U.S. dollar system was a great privilege to the U.S., and it only really remains in that position if you make it frictionless and easy for people to use. And it is anything but that today. We have decided to weaponize it. Now, whenever you think about the war in Ukraine, we wrote a piece, we called it an economic singularity. We had no idea what would happen, but we knew it was profound what we had done, freezing the Russian reserves, $300 billion in assets overnight. Basically default, that's a default, right? I mean, from the eyes of the Russians and from the eyes of every other country that is now angling to join the BRICS movement, that was a default. We defaulted on a debt obligation. Whatever you want to call it, however you want to spin it, the war, just, all of this other things, war crime, Putin's war criminal, the U.S. defaulted on a serious debt obligation. Europe actually defaulted way more than the U.S. did because most of those reserves are actually European debt denominated in euros, and the U.S. was some small single-digit % of this because Putin diversified away from the U.S., seeing this coming, only to find that the Europeans stabbed him in his mind. Now, again, I'm not being a Putin file here, but the world, it doesn't matter what we think, doesn't matter what the newspapers tell us to think. What matters is what the global South thinks. 7 billion people not in the G7, not in the Anglo-American NATO sort of Western upper crust of the global society. The 7 billion people looking at our standard of living and wanting to recreate it for their own people, those governments are very seriously looking at the unit because they see themselves as the next potential target for U.S. sanctions. And something's got to give, right? And so we'll see. We're watching that meeting closely. We wrote a piece on it a couple of weeks ago just to put it on our subscribers' radar, because the media just doesn't cover these things. Right. And I think that's a great inefficiency that we occupy at Doomberg, which is we're free to write about whatever we want. And so we write about what's interesting to us.
And that's why people should subscribe to Doomberg and their Substack, because it is incredible. I just learn something new every time I do read it. And obviously I'm probably behind. There's some stories I just haven't read in the last few months. But again, when I read it, it's just so enlightening. And it's educational more than anything else. But it's not something that you're not telling people what to think. You're teaching people how to think, which is.
And we're not selling anything other than our writing. And hey, look, you don't have to read it. You just have to pay for it. Like if your check clears, you can read as much or as little as you want, my friend.
That's right. All right. Okay. So Doomey, we've got 3 weeks until election. My kind of sense here is that people are just kind of tapped out already. They want it to be over. They wish it was over last month. It's really interesting. There's not really an outsider in this election like there usually has been. With both candidates, we kind of know what we're getting. I'm just kind of wondering that a Kamala win wouldn't be surprising. A Trump win wouldn't be surprising. We know what we're going to get in either case. I mean, I think it'd just be more of a sigh of relief that it's over come the following day. Am I playing this down too much?
I think a definitive outcome would be a relief to the market either way. A disputed one is a real challenge. If you push me today, I think Trump wins in a landslide. I think the betting markets are sniffing out that the polls may be a little, thumb on the scale. At last I saw, it was up to 60% in the betting markets, and that's real money. People betting, markets are pretty wise. We shall see. I think the whole scandal, really, about pretending like Biden wasn't senile is going to come back to bite Democrats. Harris has not received a single primary vote in her life, and she's installed as the candidate. Like, that doesn't sit right with many people. And it was very clear to any outside observer, even during the 2020 campaign, that sadly, tragically, Joe Biden was sliding down the curve pretty quickly, and now it got to the point where they just couldn't hide it anymore. I mean, the thing that boggles my mind, and I think that the thing that might actually cost the Democrats the elections, is how can he be unfit to run but fit to remain? Like, who's the president of the United States?
It's a great question. It's a great question.
Stop lying to us. Like, make Harris the president, give her the football. Let's see how she does. She gets to take a few snaps from scrimmage, and we could see. Right now, she's stuck in this limbo where she can't really run against the last 4 years, and she's sort of stuck defending them. She wasn't elected. She wasn't elected in a primary. She was anointed by party insiders. It was a coup. Biden didn't want to leave, still didn't want to leave. In fact, it kind of looks like he's trying to sabotage her campaign, So I don't know how you lie to the country for years about the mental health of the president and then think that you won't have to pay a price for that at the ballot box. And look, Trump has enormous flaws. This is not, I don't have a Trump sign in my front yard, so save the comments. But ultimately, I think the Democrats screwed up. They knew, everybody knew, I knew, you knew, what was going on with Biden. Why didn't they have an open primary? Let Hillary Clinton run, let Gavin Newsom run, let Harris run, let Bernie Sanders run, let the voters decide, and then swell behind your candidate like you always do, the traditional American Democratic methods. They didn't do that. Team Biden ran the clock out on the primary. They stopped JFK Jr. from running. They tried to keep him off the ballots. They've been suing to keep the Green Party candidate, I think her name is Jill Stein, off of various ballots. It's like the antithesis of democracy. And then they install Harris in a coup, an overnight coup, and they expect everybody to just go along and vote for the machine. So, for all of Trump's flaws, like, you can't say that he doesn't put himself out there, right? I mean, you know what you're getting with Trump. And by the way, he was president for 4 years, so all these apocalyptic predictions about the end of democracy, like, democracy didn't end when he was president. And so we'll see. If you push me, I would say that Trump's probably going to win by a sizable margin. And that's very bearish for commodities, I should say, counterintuitively. Baby drill is not good for commodity equities. In a perverse way, a Democratic administration with a tough EPA is the best thing that could happen to oil and gas, because it forces them to crimp supply, and they make all their money on price, even though they don't realize it. And so the industry has no discipline, has no track record of discipline, drills itself out of business all the time, thinks they can make up price with volume, which only drives prices lower because of the inelasticities. And so Trump would be very bullish for supply, bearish for commodity price, bearish for commodity equities, and the reverse is true for Harris in our view.
Well, I think it would be about 5 seconds if it were a landslide in Trump's way. It'd probably take all 5 seconds for the mainstream media to call foul why Kamala Harris was a bad candidate.
They'll throw her under the bus.
They'll throw it so quickly.
And they'll start impeaching Trump.
Yeah, I mean, damn.
Yeah,
right.
U.S. is a mess. That's
yep. All right, Doomberg, great conversation with you as always. I appreciate your time. Keep up the great writing. Please visit him at his Substack, and they do such great work over there. And I look forward to our next conversation. Enjoy the rest of your fall.
You too, my friend. Clearcommodity.net. That's where you can find all the Doomberg work.
Are you looking for a syndication here?
No, I'm just giving you a well-deserved plug, my friend. Great to talk to you, and looking forward to the next time.
Thank you so much. All right, welcome into our second segment here on this week's long form episode, and we're going to focus on a particular gold miner, but also on the back of a little bit of, I guess, geopolitical kind of rumors and concerns. Last week, we talked about China, on the Chinese economy, what it means for the global economy. We also talked about mining in Mexico on the back of the new administration there. In this conversation, we're going to move to Africa and talk about Burkina Faso. We're also going to get an update, a corporate update from Orezone Gold. They do trade on the TSX with ORE and on the OTCQX with ORZCF. Happy to welcome in CEO of the company, Mr. Paddy Downey. Hi, Paddy. How are you today?
Good, Trevor. How are you?
I'm doing excellent. It's Friday, so we're getting close. Getting close to getting to that weekend.
I thought,
Well,
yeah,
this is Thursday. We're recording on Thursday.
Yeah, the weekend is all the same to me. When you're running a mining company, the weekend is still production.
That's right. Absolutely. Okay, well, let's kick things off with production. You did publish your Q3 2024 production results, producing 26,500 ounces. Year to date, just over 82,000 ounces. Average realized price of ounces sold, $2,473 per ounce. And you remain within, you think you're gonna hit that guidance for end of the year, kind of midway in that range. Let's just get maybe a general sense of Q3 challenges or any sort of the headways, win to your sales type of work.
Yeah, so we were pretty happy with the quarter. I mean, we were hoping to get into full production at the end of Q3 into the south. We were slightly delayed there with the weather. You have to put roads in, you have to do pre-stripping, etc. So what we did actually, we took that opportunity, we pivoted a little bit and did a full mill shutdown. We were going to do that in Q4, but we decided to do it in Q3. Just to note, we still put a record tons through that mill, even with a 4-day shutdown. So that sort of gives you an indication as to where we're going. That's a run rate of 6 million tons per annum. What that gave us was the platform to get into the south. We're in there now. We're mining pretty much full bore there. The start of Q4, we've done just over 6,300 ounces in the first 15 days of October at a 33% higher grade than Q2 or Q3. So that sort of gives you an indication. So we're very comfortable and confident with our guidance. So really, we were hoping to be there about 3 weeks earlier. We probably would have had about the 30,000 into Q3, but we will replace it in Q4, bearing in mind now that the full mill shutdown is done, and we have no further planned mill shutdowns or maintenance during Q4. So it should be a pretty good run rate for us during that time.
You mentioned the Siga zone in the news release and starting free digging and provide ore from that into the quarter. Where else was the ore coming from prior to this?
Well, mostly the ore was coming from the north and a little bit from Siga East. We had to put the road down into Siga South, which is the main zone in the south. So we were really mining from what are called the H pits in the north. A little bit more stripping as we had to push back. So and it's slightly harder ore. We're starting as you go down the benches, you get slightly harder ore. So your throughput is normally affected, but we were able to keep that throughput up with a few mill modifications. And the recovery is hit by generally about 1% as you're into that transition ore. We're back up now in and around 89, 91% recovery. So we were never into the south until we did the relocation. That's now complete. The fences are up. We're mining fully from that area. So pretty good run rate at this point in time.
Okay. You mentioned the North Zone. You had some exploration results, actually some very promising explorations there as well. Let's walk us through the significance of this.
Yeah. So this is what you term an orogenic system, which means it's got deep roots. We've never really explored to depth, to be frank with you, Trevor, mainly because when I took over, we were building an oxide mill. The previous owners were looking at a heap leach, so they never really focused on the hard rock beneath it. We've done quite a bit of work in 2022, 2023 on that, looking at the systems. We discovered P17. So we took a pretty big swing here. Normally you'll take a 20 to 50 meter cut below your pits just to see where you're at. We took a 200 meter home run shot, and we hit 50 meters more or less at about 1.6 grams. That's, our current reserve pits are at 100 meters. That brings us down to, over 300 meters depth. So when you think about that over a 12-kilometer strike or a 14-kilometer strike, that gives us great confidence that we're sitting on this sort of 7 to 9 million ounce target here. We're continuing to drill. We will add a second rig. We've just hired, we haven't announced yet, a new manager of exploration to lead the team down there, very experienced West African hand. We're very excited about it. We're now really starting to get the understanding of the plunges and folds of this system. And when you see that sort of continuity over those widths, you know, it's really, really exciting for this project. And it was a big swing. I was convinced to do it by the team here that we should do it, and we did it, and we're really happy we did do it.
Mm-hmm. And how does this fit into that hard rock expansion? It seems like another piece to the puzzle.
Yes. You know, obviously we were hoping to build the larger expansion, but based on, you know, our not getting our battery turns and a little bit of issues with the power with the contractor Genser, we didn't have the treasury to hit it full bore. So we're doing a 2.5 million ton per annum expansion. To be frank with you, we should be building a 5 million ton, but we're going to do it in stages. We're not going to over leverage ourselves. We will be at a maximum debt position during this of about $80 million. Obviously, if gold price continues to be strong, we will look at bringing that other expansion forward. That would sort of put us in the sort of 250,000 ounce a year sort of production profile. You know, it really is a tier one asset with tier one exploration potential. So, but with the expansion that we're putting in, we get to 180,000 ounces. At current gold prices, we will be really spitting out the cash. And as I said, the maximum debt that we will put on the books during that time will be about $80 million. So still very, very low debt, you know, per production ounce.
Okay. You know, I'm watching, we reported the news on the production numbers this morning. I'm watching the chart. There's little activity of significance in the chart. And I think it feels like the market is anticipating the financials and what, you know, the bottom line of this production really means. And if you are able to lower those costs per ounce. I mean, last quarter it was the all-in sustaining costs were just over $1,600 per ounce. Cash costs just under $1,400 per ounce, and so it kind of feels like the markets. That's a little bit more important to them if you can bring down those costs. Where are you confident that those costs will decrease with these numbers in Q3? And if so, where are those costs? Where are those costs going to be cut? All right.
No, costs will remain the same in Q3 simply because of the grade. We were not in the higher grade. They will come down significantly in Q4. It'd be a big drop. We're seeing it already, you know, in the first half of October. We monitor our costs quite carefully. We're also in free dig and they're shallow. So that's, you know, you're less power. You're not using any explosives up in the north. We're using a little bit of explosives on the transition to fluff up the ore. It's not drill and blast. It's really to loosen it up to make it easier to load onto the trucks and easier to run through the mill. So we do have a little bit of that. But, you know, overall, we're pretty comfortable with our costs for the year and our guidance and our numbers for the year.
Okay. Let's add another $200 onto the gold price in Q4, shall we? What does that do? So Q4, you're talking even a higher gold price and higher grade, it seems like. That's what you're anticipating.
Yeah, we're anticipating a very big uptick in the ounces, and obviously a downtick in the costs. A, for a number of reasons: A, grade, and B, the fact that it's all free dig and it's all easy mill, so you're using less power, and you're not really having to use anything in the pits to fluff up the ore. So big difference for us in the costs.
Okay,
we expect during Q4 we will rapidly advance our expansion. We will continue to do exploration. We'll continue to pay our corporate taxes, and we will continue to put money on the balance sheet.
Okay, very good. All right, let's step away from operations and maybe talk about the politics of working in Burkina Faso. There was a volatile day last week. There was the junta leader of Burkina Faso, Mr. Ibrahim Traore, mentioned the verbs, you know, canceling permits, mining permits in the country. And obviously the market took that, and a lot of speculations, a lot of volatility, a lot of actual fear and selling straight into it, exactly what that meant. You put out a press release shortly thereafter reaffirming your shareholders and the market that your permits remain valid. We do need to open this up. We need to talk about where this kind of threat came from, what the basis of it is.
Yeah.
Why are operations operated by, Western companies or even Australian companies for that matter, or appear to be safe now, and really what that dialogue is between Western miners and these operations and the government in place now.
Yeah. So look, I think first of all, this it was on 2-year anniversary of him coming into power. I think the comments were generally taken out of context of what he meant when he was talking in this regard. Since he's come into power, there's been a number of things have happened. One was a flood at a mine in Burkina that killed a number of people. It was a Western company. They ended up leaving the country. The country had to sort it out. There was another issue with an explorer who wasn't doing the work on the project. And then obviously most recently the lithium endeavor issue where the government had to step in to help out that. So the government was a little, has been a little disappointed with some of the things that have occurred. It's nothing to do with anything for us. The government reassured us right away that the comments were taken completely out of context. They wrote a letter to the Chamber of Mines. There's no issue. Everybody just calm down, just get on with your business. Nobody's taking permits away. Nobody's taking over mines. It was really a message that, look, operate within the laws of the country. And it's a little bit of speaking to his own audience in some ways, but no, 100% not. We have a bank we're just about to finish our debt. They're a local bank. If they felt there was anything issue and any concern, we would not be doing this debt loan with them. We also have a large local shareholder who put $47 million into the company. That wouldn't happen if these type of things were considered to be at risk. So I think everybody needs to take a little bit of a chill pill here. He made a statement. It was really around some of the things that occurred during his 2 years of running the country, where he saw, look, if you don't do things by the law, we're going to look at it. And there's nothing wrong with saying that. I think everybody just completely took it out of context. In the meantime, Endeavour, Rocks Gold, I Am Gold are taking out the dividends out of the country. No issue taking that out of the country. We've been paying all our debt locally in country. It's business as usual.
Mm-hmm. There's a little some mention of West African countries with gold being a predominant export, severing ties with Western countries and seeking closer relationships with Russia. But there was very little context given into this reporting. Is there anything you can share that you know of? I mean, is this certainly happening, or is it maybe that overblown? How do you phrase this?
We haven't seen that in Burkina. Burkina does not have a long relationship with Russia. Never has had that. Just recently, the IMF were in country. They just left issuing a statement that they were going to continue to support Burkina. Burkina has made all its payments to the IMF. The IMF and the World Bank will continue to work with them. So we see that as obviously they're going to do their own due diligence. I don't get into the machinations of the government or what they're doing or who they're dealing with, except what's coming out and what we see, and that tells us that you're seeing the government dealing with the Western sort of banks, Western lenders, and continuing to look to them to support the economy as it moves forward.
Okay. Very good. I mean, tell me about that day. That had to have been a very stressful day. Were you caught by surprise with this?
We knew the statement. We were caught by surprise by the reaction. We thought, it would be. He's made that statement before about Western mining companies, working to the code, working to the law, etc. That's not been a mantra that has been that is new in country. So we were sort of caught by the reaction. Obviously, we immediately contacted the president's office and the Minister of Mines, Minister of Finance. We got total reassurance. Look, there's nothing going on here. That's been taken totally out of context. Move on, do your business. We've just negotiated a new mining code. It's going to be put into law. It was done in a fair and equitable manner. That's what we're doing. So don't sweat the reaction. They were a little taken aback by it, but it's not something that he hasn't said about. Look, play by the rules, play by the country's code, and or else be prepared to lose your license. No different than, and it should be no different than any other country in the world.
All right.
So what are the expectations of shareholders and people watching this story, Paddy, as we kind of work into closing out the year? I mean, that day with the news, you lost a little bit of market cap. It was nice to see people coming in and buying the lows of that day and climbing that share price higher. So, I mean, that was nice, but you're still not back to where you were the day before that news was hit. So what are the expectations?
100%.
All right.
Well, first of all, we just got to, keep doing our business and keep producing the way we said. We're well advanced on our expansion. In fact, we're likely ahead of schedule. We're going to be pouring concrete in Q4. We were supposed to be pouring in Q1. So things are starting to move ahead really fast. We just got to keep executing. In regards to where we go, what I look at, to be frank with you, is I look at companies on the ASX like WAF, like Resolute, etc., and they keep hitting all-time highs, and they're in the same jurisdictions as we are, in some cases tougher jurisdictions than we are, where there's been all sorts of things going on that have not occurred in Burkina. And so, maybe we have to look for a different shareholder base to start coming in that has less of an issue with West Africa, knows it very well, has made a lot of money for their shareholders and for their funds, etc. But as far as what we're doing, we're going to hit a record production in terms of tons through the mill. We've been able to meet our guidance, and we'll meet it 2 years in a row from startup as a junior. We're building expansion. I expect it to be on time, on budget again, which will put us into that 180 to 200,000 ounces a year, with the expectation that we'll go to 250, 300. So what are we doing wrong? I don't know, but we just got to keep delivering as we promise. We don't overpromise, we'll under-deliver. I think we've continued to do that. And we'll look for other opportunities in the region. We've got a strong shareholder base. We've got a local large shareholder. We've got a bank that supports us and supports our growth profile. We just got to keep doing what we're doing, and eventually I think people will get it.
All right, Paddy, it's good to connect with you. Good, thorough conversation here. A number of angles that we needed to catch up on, specifically the political angle. I think that helps kind of clear the air a little bit for a number of people. I really appreciate you spending some time and answering those questions, and have a great rest of your weekend.
Yeah, no problem, Trevor. And the other thing is, we were actually down in Burkina that week. There was no indication of anything, or we've been just sitting with the Minister of Mines, Minister of Finance, and finalizing all the little nits and gnats on the new mining code. So it was, as I said, things get taken out of context, and it is what it is.
Yeah. All right. Well, in this age with the internet, Paddy,
yeah,
tends to happen. All right, everybody. Yeah, that's a wrap here this week on Mining Stock Daily. We'll be back Monday morning with the morning briefing. Have a great couple days, and be well.
Thanks very much.